Ashley, to the extent our viewers know Vista, they know it as a giant private equity firm. I report on, obviously, when you do take private. So just explain to us what you do as a head of equity capital markets at a firm that typically takes companies private, not well, maybe they do take them public as well. Well,
the fun of the equity capital markets is you get to take things private, and then you also get to re-IPO them, and you also get to manage public investor and public investor perception around software and have those conversations and understand where are they investing, why are they investing, what do they like, and what don't they like.
Yeah, okay, great, because that helps people understand why they should listen to you right now. We talk a lot about the absence of IPOs. 2024 was supposed to be a strong year. We all have heard so often about AI-related names, perhaps a bit early in their gestation. Nonetheless, so many others in your portfolio. Why haven't we seen more IPOs? What are you hearing from those very investors in terms of their perhaps reluctance to invest in a new company's shares?
I was very excited this time last year because I did think 24 was priming to be a good year. But for the IPO market to open up in earnest and return to sort of normalcy, we need three things. And I think you've heard these three things, but we need a lack of volatility in the market. We need to see stable markets. We also need to see interest from investors. We need to see a risk-on appetite. And then finally, and this I think is the most important and really came to fruition this year, is we need to see consistency and clarity from corporations around their business plans. Like, how are they planning on executing, and can they hit their numbers? And that, I think, really formed this year, which is why I think we're very excited about 25 as an IPO year.
You do. There hasn't been a seminal change. I mean, I try to talk often about the private markets, private credit, the ability of so many of these companies to stay private for longer given the capital that's available, or even for you as one private equity firm to sell them to another. What gives you the confidence, given the three things you said I could argue have all been in place to a certain extent this year, that next year will be different?
So I definitely agree with you that interest in IPOing has declined, broadly speaking, amongst founders and corporations. However, I want to balance that with the fact that we have obviously had a dearth of IPOs. And if you think that, historically 45% of U.S. VC-backed firms go public, that's like over 350 firms looking to tap the market at some point. And that would take, that backlog, if we go back to a normalized rate, would take almost a decade to clear. So I believe that as the market opens up and as we see investors really pulling for that and demand for those IPOs coming through, and we continue to see strong aftermarket performance from the IPO asset class, you'll see IPOs in 25.
And so what about your portfolio companies at Vista? What are you seeing, particularly, of course, as they start to add generative AI to their various offerings and/or it impacts their business both positively and perhaps from a competitive standpoint as well?
Our portfolio has been exceedingly resilient and sort of in this high cost of capital environment, and the implementation of Gen AI has been game-changing on a whole host of levels. I think from a broad perspective, software is really poised to take advantage of this technology and sort of the new wave of capital being deployed into software.
So how would you characterize sentiment with regard to software versus AI? Because as David laid out in your intro, you just raised a $20 billion fund focused on AI, despite kind of a software upbringing for the firm. So I'm curious if that's a response to investor sentiment. And it really, there is this kind of notion that investors see things as a zero-sum game between AI and software, or if it's a way to kind of inform your software portfolio companies and kind of blend the two.
So software, we believe, will be the ultimate beneficiary of generative AI. However, with anything, any new technology coming on, it takes time to layer in and to see those measurable and monetizable moments. And so for software, investors need to be patient, and they need to look for breadcrumbs or proof points of generative AI technology actually changing their business and making their business better. And there's sort of three layers you could do that. You can do it on the growth side, on the margin or efficiency side, and then the last side, which I think is just starting to come into play, is the CapEx or partnership side. You're seeing a lot of software companies starting to partner together to really bring this technology to the forefront.